some things associated with this transition which are common to developed countries in China, other things which will be a bit different. One fundamental thing that will be common to both the developed world and the emerging market countries is the kinds of policies that will be necessary. Professor Mao emphasized very strongly that if the market is not corrected, then it will continue to cause damage to our environment. But we can correct the market. The first thing we have to do is to get a proper price for greenhouse gas emissions. That's fundamental. They cause damage. People should see in the prices they face some reflection of the damage they cause. But that's not the only problem. Sometimes people say, well, just fix that part, just fix the problem of the price for greenhouse gases, everything else will work. That's not correct. There are other important market failures here. Fundamental, of course, is research and development, and we do have to see very rapid technological change, and research, development, demonstration are activities which benefit other people. So again, you need to encourage those activities. Networks like public transport, like electricity grids, like the network for recycling, and so on, they will be an important part of the story, and unaided, markets can't create those. It doesn't mean you have to be provided by the public sector, but you need public policies that will support networks. We know that the capital markets handle risk badly, and there are long-term investment strategies which probably would not be financed without some kind of support for the capital markets. Important aspects of information. We will be embarking on technologies and activities which people have to learn about, and information will be very important. And there are all sorts of other issues associated with emissions and pollution and so on, which we sometimes call co-benefits, clean air, energy security, biodiversity, and so on. So there are a range of market failures here, not just one, and good policy requires activity by the government in all those areas. Sometimes it will be government investment, sometimes taxation, sometimes carbon markets, sometimes the creation of development banks. It will be different kinds of government intervention. But we make a mistake if we think it's only about greenhouse gases and their prices. Fundamentally, of course, that's where we begin, but that policy can't stop there. Now, looking at the differences between the rich countries and China, the rich countries, particularly Europe, but also the United States, have a very difficult fiscal position. They've got to try to promote this kind of investment without too much drain on public resources. They're going to have to see that story of change driven by private sector investment. Fortunately, many companies in Europe are very liquid. They're waiting. They've got good liquidity positions. They're waiting. They're waiting for good policy signals on the macro front, but also they're waiting for good policy signals on the sectoral front. So if we strengthen policies in Europe in this area, showed that this was a sector that would expand, then I think the investment would start to flow. So what that underlines is that it's not just pointing to the right kinds of policies, we've also got to underline that those policies must be credible. People will not commit billions of dollars in investment unless they see that those policies are likely to last. So policy credibility, I think, is a crucial aspect of getting private investment going, certainly in Europe, probably in the United States as well. And of course, this strategy of change does have long-term credibility, because I think most people accept that one way or another, we're going to have to move strongly in a low-carbon direction. Turning to China, well, China is making a radical change. The 12th Five-Year Plan was a very important step forward, one that's inadequately understood, in my view, in the rest of the world. And many of us do our best to explain the 12th Five-Year Plan in Europe and the United States. But the numbers are worrying. China is dramatically cutting emissions per unit of output, but output is growing very rapidly. Now, the answer is total emissions for the global economy are close to 50 billion, 50 billion tons of CO2 equivalent each year. Currently, China is about 9 billion tons of CO2 equivalent a year. China is around 9 in 50. 20 years from now, if we're to have even a 50-50 chance of attaining 2 degrees centigrade above 19th century levels, emissions for the world must be well below well below 35 billion tons. 20 years from now, well, 20, let's say, take 2030. Where will China be in 2030? Well, in 2020, China's 9 billion tons will have gone to about 12 billion tons. We can see that very clearly in the 12th plan and what's likely to come in the 13th plan. So there's a huge question. Will the 12 billion in China in 2020 become 15 billion in 2030, or will it start to come back to the 9 billion that we see today? If it goes from 12 billion in 2020 to 15 billion in 2030, then China will be 15 billion and the world's carbon budget will be less than 35. That looks, if China goes to 15 billion, it would not be possible for the world to have much chance of holding to 2 degrees centigrade. And of course, it's not just China, it's what happens everywhere else as well. But China is a very big place, and that arithmetic is enormously important. If, on the other hand, China was able to rise to 12 billion in 2020, and then over the course of the next decade, perhaps go up a little more, but then start to come down, then that overall carbon budget for the world starts to look possible. Now, this is not to put too much weight on China, it's simply to remark that China is inevitably a big part of the world, and the overall budget arithmetic really does matter. So China, I think, is in many ways leading the world in making the change, but nevertheless, the brutal arithmetic of what's necessary suggests that we should all hope that China will be able to accelerate that change. Now, let me briefly illustrate what's happening. I've emphasized the magnitude of the change. This graph represents a story of the dramatic fall in the cost of solar PV modules. About 55 or 60 years ago, a solar PV module price in current terms was a few $1,000s per watt. A few years ago, it came down to $2 a watt. Now it's close to $1 a watt, and Mr. Zhengrong Shi of Suntech tells me that a few years from now, perhaps 2 or 3 years from now, it could be 50 cents per watt. So the kind of change that we're talking about, I've chosen a dramatic example, of course, but the kind of change we're talking about is not fanciful. It is realistic, it is possible, but of course it does require continued technical progress and strong investment. Let me give you another example from transport. These are emissions in terms of grams of CO2 equivalent per kilometre for cars. You can see at the bottom the blue and green lines are the Japan and the EU, and at the top you've got the United States, and the yellow line in the middle is China. So what you can see here is that first there are dramatic differences across countries in the emissions from motor cars. Secondly, that in all countries those emissions are falling quite rapidly. So again, telling us that if you want to make change, you can make change quite quickly. And the dotted lines extrapolate from now into emission standards in the future. So there is enormous scope for the world to drastically reduce its emissions from cars. The EU and Japan are already quite low, but they are headed downwards strongly. China, somewhere in the middle, but China could also move much more strongly in reducing emissions from cars. What about the at the top there in terms of kilograms of oil equivalent per $1,000 of GDP. China's use of energy per unit of output is falling. It is falling and it has fallen. But it still is 2 or 3 times as high as some of the more energy efficient countries of the world. Now, of course, China has a bigger manufacturing sector as a proportion of GDP, but you've got Germany and Japan, for which manufacturing is quite important, right down the bottom there. So we've looked at solar PV in electricity and seen the possibilities and the actuality of change. We've looked at transport and cars, and we've seen the possibilities and actuality of change. And we've looked here in terms of energy efficiency of the economy at the actualities and the possibilities for change. So I do think that we're right to be optimistic about what can be done. And I also think we're right to recognize and celebrate the pace of change in China. But we all have to recognize that in rich countries and in China, we have to accelerate. So this is my last slide here. In order to accelerate, we have to invest. How much are we going to have to invest? That depends on how fast technical progress moves. It depends on the structure of the particular economy. But we're probably talking about extra investment necessary of 2 or 3% of GDP. $1 to $3 trillion per annum, expressed in terms of current GDP of 65 or 70 trillion. That's an important increase in investment. Where will those resources come from? It depends where you look. In China, with its very high investment rates and actually quite low efficiency of investment in many cases, I think in China the extra resources could be generated through a reallocation of investment and an increase of efficiency of investment. Probably in China there's no necessity to increase the savings rate. It could be found from existing savings. In the developed world, I think much of it could be found from the recovery and the increase in output. In some cases, it would require extra saving. So I think where you look around the world, you'll get different answers on where these overall macro resources will come from. But what about the finance to mobilize? You can say in principle, through reallocating investment, through saving a bit more, in principle you could fund this, and you could. There is a question of whether the finance will emerge to mobilize those resources. I believe that with strong and clear policies, the ability to invest and the willingness to finance that investment will be strong. But I think also we're going to have the involvement of public investment banks as well. Because the involvement of public investment banks plays a very important role in reducing the perceived policy risk from investors. That is why I think that the idea of the BRICS-led investment bank, which was supported at last BRICS summit meeting in February in Delhi, in India, is a rather important development. This is a bank that will be created by the BRICS countries, in which emerging market and developing countries would have a majority.